Welcome to Growth and Exit Strategies for Software and IT Companies, the flagship tech conference of the World Financial Symposiums. The GXS conference caters to tech founders and investors in tech M&A, covering topics like investments, growth strategies, buyouts, sales, divestitures, and mergers. Thank you for joining us. Let's begin.
Let's move on to our investors panel, where we'll answer the very important question: where are the investors interested in making acquisitions? Moderating today's panel is Rob Wellman, Vice President at Corum Group. It's a great opportunity to listen to what investors are looking for. Rob, the floor is yours.
Well, thank you, Rob. Griggs, thank you for that. Welcome to the investor panel. My name is Rob Wellman. I'm a fellow entrepreneur. I sold 4 of my own companies, including IPO on NASDAQ, and honored to moderate this panel. We've got some fantastic guests today. And so I'm going to let them introduce themselves to get us started. And as you do, would you please state your current role? What are the fundamental characteristics of companies that you invest in? And what sectors or market sectors are intriguing to you and why? So let's begin first with James, if you'll give an introduction.
Sure. Hi, Rob. Thank you for having me here. Pleased to meet everybody here, Sanjay and Sarah. My name is James Shen. I'm the managing partner with Pioneer Ventures. Primarily, we invest in early stage tech companies. More recently, we're being more focused in the space tech space, but specifically like LEO, low Earth orbital companies or rocket launch companies. And we believe that's the future for the next 20 years.
Fantastic, James. Great to have you. How about you, Sanjay?
Hi, everyone. I'm Sanjay Swamy, managing partner at an early stage fund again based in India called Prime Venture Partners. As you can see, it's bright and sunny in your part of the world, and it's late in the evening here. But great to be on this recording and on this show and on this panel with the two of you, Sarah and James, and of course Rob. We are an early stage fund. We are focused on tech startups, which fall into 2 categories. The vast majority of what we back are companies based in India, and in many cases targeting the Indian market. We have a very vibrant, digital startup ecosystem here in India. A very unique digital public infrastructure that was put in place by the government. And the focus has been, very massive adoption of digital services through smartphones and the access to the internet through smartphones, financial services, formalization of the economy. These are sort of 2 of the big themes here. The other part of what we do is about a third of what we do is investing in global SaaS companies. India is a hotbed of SaaS companies that are targeting the world, and of course with AI now, that's like a very, very large opportunity space. So that's who we are, and the background, all partners have been entrepreneurs. All of us had worked several years in Silicon Valley during the .com era, and have been back in India for the past 15-20 years building over here. So great to be here and happy to share some of our experiences.
Yeah, fantastic. Thank you. Looking forward to greater insights from you and from where you're joining. Thank you. And we'll wrap up introductions with you, Sarah.
Sure. Also delighted to be joining you today. I am Sarah Young, as you mentioned. I'm founding and managing partner at Sandpiper Ventures. And Sandpiper is an early stage Canadian venture capital fund. And we invest in women-led innovation. And my background, I'm a founder turned investor, so an operational background. I've built and exited a company, and I mentioned it before that I did it the hard way. I bootstrapped a company, and I did that by remortgaging my house when no one would invest. And I guess we can talk a little bit later about whether I would recommend that or not. And today, together with my partners and team, we take exceptional founders who are looking at really complex problems in the world, which we happen to have many, And how do we, and you asked the question about which markets, markets like health, climate, and the future of work and education. And we're really looking at where is it that, and we really believe in our thesis is based on that diversity consistently drives performance and returns. And so that's, I think, oh, you asked, what are we looking for? And we're looking for identifying those untapped market opportunities for that diverse leadership. It's not only has it been proven to outperform, but we believe and we've seen that it's an arbitrage opportunity. I'm based on the east coast of Canada. You can't tell from where I'm sitting that means I'm right on the ocean, and it's sunny, middle of the day, and if I was looking out a window, you'd see boats sailing past, and I would love to be hosting you here.
Well, that sounds delightful. And Sarah, I think many on the webinar today can relate to mortgaging a house or a car or a kid to start a business. And so fun to hear that background. As you can see, we have a really experienced group of panelists today with deep experience, great insights. So we're really excited to have all of you. Sarah, we're going to begin our first question with you. Any past examples of companies or technologies that you were excited to invest in? And what quality stood out most as you thought about that? And give us maybe some insight on how did those companies turn out and what lessons do you learn? We'll start with you, Sarah, and then Sanjay, and then James. If you'll all respond to that question, that'd be great.
Sure. So I mentioned that we're really looking for obviously companies who are trying to solve big, complex, systemic problems. And so two companies that I would think about or that I would reference, one is Protexa. It's a cybersecurity startup that's using AI, and it's really focused on being human centered. So a lot of the challenges within cybersecurity are human based, and so that for us was an opportunity, and it was an opportunity because the founder came from financial services, had been the CIO and CTO at some of Canada's largest financial institutions, had deep experience, a great team around her. And we're always looking for scalable and export-ready companies. And so the founder already entering other markets. And so this is a company which is already present and growing, strong user engagement, strong system-level impact. And so that's been a great company for us. Another one I would reference is GotCare, a healthcare platform which is looking at access and delivery for home care across Canada. And again, we're seeing healthcare as one of the big challenges that jurisdictions and institutions and governments are really grappling with about how to remodel. And so GotCare is introducing a platform that is working with people and really changing how it's working. And again, same thing, really seeing strong, consistent growth. And one of the things that we're really excited by and proving out in our thesis is that women-led and diverse founders consistently deliver strong capital efficiency, strong profitability, and we continue to see that growth throughout not only their tenure but throughout our portfolio. So they're great examples. Really strong founders working really closely with their partners, and we've been thrilled with the work with them.
Hey, Sarah, a couple of follow-up questions there. We're seeing an increasing trend of women-owned founders and owners. So that's a trend that we see here at Corum across the globe. So it's fun to hear you talk about that. But I was curious, this first company you mentioned, some of the export capabilities that they're focused on. How are you guys thinking about the tariff noise that we hear in the market. That's on the mind of a lot of individuals. Any insights there?
Tariffs, yes, we've heard of those. It's so a couple of things. I think one of the things that we have always so a couple of things. I think our portfolio companies right away, and I think the feedback that we've had is that my two partners, we've always had an operator focus based on our experience, having previously been CEOs, is that constantly doing a what are the scenarios? How do you be ready for challenges that come up? And so from the very outset, looking at what are if they weren't already in other markets, starting to look at what would it look like to be in other markets. So we've been working really closely with our portfolio companies. And so a lot of them, if they reordering in terms of exploration or go to market in other markets. So the first company, Protexa, that I was talking about, they're making great headway both in, they already had a strong presence in the Caribbean, and now a lot of traction in Africa and in the Middle East. And that's been as well as the U.S. I think on the tariff front, we continue to watch it really closely and prepare. I think one of the challenges we continue to see is the uncertainty and the instability is almost as challenging as the actual tariffs.
Yeah.
So I think at the same time, we're also on our end, we're also seeing a lot of new investors, and we're in the midst of a new fund right now who are also really curious, or looking or investigating new options because there's instability stateside too because of the uncertainty that the tariffs or the instability in the markets right now. And so investigating places like Canada for funds as well, and companies. And we have a number of companies who are raising. So it's caused quite a ripple, and some of the impacts are uncertainty and instability, but others are creating opportunity. And as and we're not the only ones, would say, how does it create an opportunity? And they're certainly trying to make sure that people are chasing down the opportunities where they are.
Great insights. Really appreciate that. Sanjay, this question about past companies or technologies that you were excited to invest in, what were the qualities that stood out the most, and what lessons did you learn from those investments? It looks like we might have Sanjay on mute there.
Sorry.
Oh,
Yeah, so I'll probably use an example of a company in our portfolio called Doze, DOZEE or DOZE, depending on which side of the world you're listening to us from. This is a company that's a deep tech play in healthcare. Might actually have some synergies with the company you mentioned, Sarah, which you can take offline. And what it does is it has a proprietary sensor sheet that goes under the mattress, and through which, it's a piezoelectric sheet. It's able to record the vibrations of the heart, and through the AI and data science, convert that to heart rate, respiration rate, and even blood pressure, measured in the contactless manner. It's very successful here in India, where it started off. Now FDA 510(k) approved, or compliant, or whatever the right terminology is, and they're just sort of launched in the US with the specialized nursing facilities and several others. Now in about, I don't know, 15,000, 20,000 beds around the world, in hospitals and other healthcare providers. And by virtue of their having, longitudinal data of patients over several, and data of several patients, they now have developed an early warning system. So the hospitals that use them have reported zero code blues in the past 12 months since they've been using them. And what it does effectively is gives an early warning that a patient is degrading, and you can now move the patient to, so you get an alert to move the patient to an ICU perhaps, or in a more strict observation long before the critical event has occurred, right? And, we measure the founders, are really super missionary founders, and that's what I was going to get to. Funnily enough, these aren't people from the healthcare industry. These are youngsters who are building race car simulators, working for Altair, and one day said, why are we trying to make Porsche richer than it already is? What problem are we really solving here? Right. And that sort of took them down the path of saying, hey, we're great engineers at all these vibration technology and analysis and, data science. What other use cases are there of the world, right? Of our expertise. And this was at the ripe old age of 24, right? And they stuck with it. It took them about 4 or 5 years to develop the prototype. And remember, in the healthcare space, they have to build a prototype, they have to validate it, they have to do clinical trials, they've got to publish research papers, they've got to get them peer reviewed. And all that is before they can actually start building a product that has to be production grade, that has to be certified as a product. We just got CE approved yesterday. And then have a business model and a marketing and sales, vehicle, go-to-market thing, right? So it just takes a lot in healthcare to bring anything to market. And I think, to me, what really struck us is actually coincidentally was the first deal we did in the pandemic. I never met the founders, and so we were all figuring out what the Zoom thing is. How do we do deals like this? Investing other people's money. But I think what was very clear to us was the extraordinary missionary aspect of these founders.
Yeah.
Right. I mean, nothing was going to stop them from basically stretching the last dollar till they found a solution here, and till they figured this out. And the ambition was, we need to be saving 1 million lives a year. Till we do that, we've not achieved anything, right? And so I could see the drive for the founders. And the second thing we look at is the prize worth winning, right? I think, at the end of the day, I always tell founders it's harder to build a small company and easier to build a large company. In the beginning, it might look like the other way around, because people will say this is never going to happen when you have a big dream. But over a period of time, success has many fathers, and people want to be associated with something that is gathering momentum. So the moment a company starts executing and starts doing well, all the naysayers suddenly come, because they realize this is going to be a big company with or without their participation. They want to be a part of it, right? And so I think for founders, the most important thing is to truly have the conviction that they're solving a really important problem, and that success is really worth winning. Not everybody is going to get there, but those who do will reap the benefits of it. And I think they have to be in it for the journey, right? The outcome is not guaranteed; the journey is guaranteed, right?
Yeah.
So if you're in it for the journey, if you're in it to solve a really large problem, the early solutions that we have, we all know that the company is going to pivot a few times before they really achieve the product market fit, etc. But the team and the problems don't change, right? The solutions might change. And I think that's what we look for, and it's played out really well so far, but it's still sort of work in progress, right? I mean, there's still probably 10% there.
What great insight, though. This mission-driven element that you talked about, I think, is so important for investors. We can get excited when there's a mission behind it and a cause, and the founders are passionate about it. I think that's great insight here. And you mentioned generative AI. We're going to come to that in a minute. I'd like to get some insights there. It's certainly a disruptive trend. James, your thoughts on maybe companies that you've invested in the past and what you've learned and some of the takeaways there.
Yeah, thanks. Over the years, we have done investments in multiple sectors of industries. It could be semiconductor or SaaS, or one comes to my mind right now. It's a company we invested a couple of years ago in augmented reality in firefighting applications. So as you can imagine, firefighters, they're working in an extremely dangerous environment, very low visibility. So this group of young people, well, at that time, I think they were late 20s or early 30s, just right off engineering school. They came up with a design on napkins. Literally, I met them in an event. They showed me a napkin of their design. of a visor that can attach to the firefighter's helmet and allows the firefighters to see augmented images of a person or objects, could be tables or whatever. So that was interesting, but at that day, during that time, it was just a napkin paper, and lots of people have great ideas, but just like Sanjay and Sarah indicated, they persist on. They were quite mission driven. They actually came out with a prototype, but I'm that's kudos to them. But these days, at least in my company, we don't just invest in prototypes. So we sort of press them on a little bit, and then they actually went on and got sales with Department of Defense here in Canada, and then so forth, so on. And they become quite remarkable. They got contracts over the world right now. They got contracts with multiple fire departments down the states. But I want to talk a little bit about the realignment of supply chain. I think when they started, the world was quite different. We essentially, there was a fairly global trade, and we can rely on any suppliers in the world. But the supply chain has been sort of disrupted. So right now they have no choice but to look for more domestic suppliers in order to meet their customers' requirement. As far as the tariffs goes, I don't think it's a real issue for them because they have such a technology advantage. So customers, if they require this type of performance, they have no choice to buy them, to purchase the equipment from them, even though they're in Canada, because tariffs are applied universally, right? So I don't think tariff matters so much if you have very competitive product or service out there.
Yeah, great insights. Let's go back to this idea of generative AI. What a disruptive trend! And I'd love to get your advice. Maybe we'll go back to you, Sanjay. You brought this up. What are you seeing with generative AI? How does that change the way you look at investments? Any insights here for investors as well as entrepreneurs?
So I think this is a topic we're going to keep learning about over the next 2-3 years too, because every day everything is changing, right? So a very simple example for us, the way we run our firm itself, right? Today, we've hired an AI engineer, and everything we do in our fund is actually now our universal front end is Claude. And it's integrated into our CRM, which is Monday.com. It's integrated into all our Google Sheets, Google Drive. We do all our analytics through this. Understanding, we can now query it. We see the board decks from companies. We get them, analyze what questions should we be asking the founders. How has the company been doing with respect to its projections, etc. And I'm using this as an example to say that these new generative AI platforms are just changing everybody's way of doing things, right? And that's going to create opportunities for everyone. So if I look at it from a company perspective, every business function is being changed, right? So we've seen many of our companies actually downsizing. Even the companies at scale, right, have gone from like 500 employees to 300 and are probably going to end up somewhere in a steady state of maybe 150 or 100 or 150 employees. And yet the quality of customer care, the quality of, how they respond to all the marketing, the A/B testing that they're doing, etc., right, is just going to be far more efficient, far more effective, far more tailored to the customers that they're targeting, right? So every aspect of running your business is going to be impacted and modified, whether you use in-house tools or whether you buy third-party products that come out, right?
Yeah, really no
part.
Oh, yeah, go ahead.
Yeah, so that is what I call the scaffolding of the business, right? This is common for all businesses, right? Whether it is looking out for prospective customers, when you get a customer lead, for example, using Perplexity and to do the research on that customer, getting more information so that you can have a quality, higher quality lead qualification even before you pick up the phone and talk to the customer. So companies have just got to look at every touch point that they have with the internal to the organization as well as with the customers, and start saying, how can we use generative AI here, right? So the second part is, just the email communication that you're going to have with the customer, right? Can we streamline it? Can we make it professional? Can we make it a little bit more empathetic sounding? Can we make it much more personalized, right? So the customer service experience, writing off, product specs. All of us are lazy and, we don't like to write meeting notes, but now you can have tools like Granola, for example, that give you extraordinary, meeting note summaries and so on. So I think a lot of things that were being done in a suboptimal manner, in a brute force manner, are going to get streamlined and are going to get extremely efficient with time. And that is par for the course. And I've not yet talked about generative AI in the product, right? I've just talked about how we are going to just make our lives much more efficient when we run our businesses. The second part is generative AI in the product, right? Sorry, I'll just finish up here and then come back to discussions. So if you're a lending company, can you use it in your underwriting process, to personalize the process, all your, interactions with the customer communication. I had a company I was talking to the other day that provides a lawyer on the spot, right? So if your car, if you're on a highway and you're a truck and you get pulled over, the police might be harassing you and you're from another state. He can provide you a lawyer on the spot. There's an FIR to be filed. Let's say you did have an accident. That whole FIR is, the police complaint is generated using generative AI. It might be in a local language if required, and it gets automatically filed. Granted, it's early days, but it's just very, very transformative to how businesses will run. And I think the third part is the platforms themselves, right? So today, of course, we're all using the existing platforms, whether it's OpenAI or Anthropic, and now, of course, we're seeing DeepSeek and a few others also coming into play. I think that part, for the moment, we're assuming is going to be up and down the west coast of the US, and is going to be dominated by those companies out there. But I would think over a period of time, there will be open source models developing in other parts of the world as well, from a localization perspective. But overall, I think, any business function, if you're not looking to use generative AI, I think you're falling behind.
Yeah, I think that's great insight. And I love how you've touched on all the holistic places that generative AI can touch an organization. And we must be generative AI going forward and consider how that works in our organization to stay competitive. Sarah, how about you? How has generative AI changed your investment thesis, or has it?
I think not so much the investment thesis. I think similarly to Sanjay, I think it's it has changed in terms of our internal operations. And then I would say our expectation is that every company that we're looking at has integrated it into their operations as well. That every founder should be they're AI enabled in some capacity in terms of how they're running their company. I think what I would say though is, and this is a little bit of your question earlier. I think one of the things that's really important is, I think for a while we had almost encouraged founders to over-index on the pitch versus the product market fit. And so we had them so spending so much time on mastering the pitch and being out there, and rather than making sure they really got that fit part. And so I think, and this is linked to AI right now, really needing to make sure that they're listening. And I think the impact of AI is sometimes changing the problem. And sometimes it's changing the customer's behaviors, and sometimes it's changing, like it's causing disruption or changing paths or it's causing change. And if founders or competitors, or it's changing things in ways, and if founders aren't listening, they're still, again, focused on the same pitch and not on the product fit or the market fit, or then they're missing that, or they're taking too long to identify it. So I would say on the thesis front, we're making sure that we're still the same focus, but we're looking for those founders who are attuned, who are looking to solve the problems, and we need to make sure that they're following those trends. And I think the only other one I would add to the making sure that that the founders are so attached to their customer versus just the pitch is that they're also that they really are not only with the aligned with the customer first and foremost, and following them and listening to them at all times.
Sarah, what great insight on product fit versus the pitch. I think that's just really a good take there. Hey, James, so your thoughts on generative AI?
If I may just add one
please.
comment, sorry to interrupt, right?
Yeah, please.
Before you switch gears. I was just going to say that, in the early stage, earlier, we used to have the concept of an idea stage company, and, back then to build a prototype and validate in the market. I think now, to me, if a founder comes and says, I need money to build a prototype so I can test market it, I think it's the wrong founder. Because in today's day and age, for $20 a month, you can get a subscription to Lovable, you can build a prototype, you can white code it. You can build a spiffy website with a $10 subscription to Gamma, right? So I think the bar for founders also, has been raised, and to test things out, to be able to reach out to customers, etc. It's just becoming so much easier that I think we are going to. I think very soon founders who come in expecting capital to pursue an idea are not going to get funded, right? So founders are going to need to say, here's the early validation, here are some early customers, and I think it's going to raise the bar in the early stages.
What a great thought there too. The speed of even a prototype has changed, so you look at that differently. Great thoughts, James. Love to hear your thoughts on how generative AI is maybe changing the way you think about it, and maybe even more practical question. If you'll follow up with this one, is what typical mistakes have you seen entrepreneurs make, and what advice would you give to avoiding them? Sanjay talked about more burden on them to get a pilot ready before asking for funds. So generative AI, and maybe any advice on entrepreneurs that you might have.
I think AGI is quite interesting. It's certainly changed how I look at some of the startup pitches now. What AGI is enabling founders to do is that just take an idea that can evoke emotion, and they can make a great product of it in a very short period of time. So right now I'm seeing a lot of young kids, like people still in universities, like really early 20s or late teen, like 19 years old. And they have this occasion they just observe something. For instance, they observe people required to track calories or receipts, and they just do what they call vibe coding. They do it over the weekend. They come up with something fairly simple, straightforward user interface, and they go and try to market it with the help of AI tools, of course. And remarkably enough, these kids are able to get millions of dollars of recurring revenue, monthly recurring revenue, within a very short period of time. So this goes back to what Sanjay is saying. Like, a lot of people are able, in a sense, you don't need a very sophisticated CTO anymore. If you're an idea person, you have a little bit about execution skills, you can actually build a fairly workable MVP product out there and test the market. And this type of startups, I don't think they need investors like me. But then again, I feel what they're doing is not quite foundational, because they're relying a lot of costs from open AI and so forth. So I don't see their business as a high barrier. But then again, it's quite remarkable. They're able to build business within a very short period of time and doing quite well. Whether it could be sustainable for 5 years or 10 years, I'm not sure, but it's quite interesting. So this is a phenomena I observe more often lately, and the advice I would give them, if it's of any value, is that try to build something that's got more moats to it. like build a product or service that can encompass casting a wider net. Maybe they can create a moat and make their business more sustainable, so they don't have to worry about open AI or Quark or DeepSeek.
Yeah, really good. So building a moat around it. I see Sanjay shaking his head, nodding to that. Sarah, any thoughts there on the moat and advice to entrepreneurs?
Yeah, no, I think that's great advice. And I was just going to add in, and this is pointed to, but just that notion of we've all been really trying to focus founders on capital efficiency and profitability in the last year or two, and AI allows that. And so it used to be one of the metrics for scaling was headcount. And so really using AI to you don't need the team to be as big. And I think for so long, again, it was how could you get that big team really quickly? And founders would do the percentage of headcount and how fast. Where now keeping that capped is actually a metric of positivity, or that you want to see it not necessarily growing headcount. And AI is a great way to do that. And so that's a shift in thinking tied to the efficiency and profitability. But that again is something different and a different signal for founders.
Interesting. Sanjay, you were shaking your head as the others were speaking. Any thoughts there and advice to entrepreneurs here?
Yeah, I think while it's really exciting to see companies getting early traction. Sometimes I do worry with AI. Are we seeing some false positives, right? Because people are signing up for these services because they're all priced at $15 to $20 a month. And I think I was even talking with some senior execs at one of the largest banks in the world recently, and telling them, look, it's easy for you to give out a $200K pilot and to try out some new technologies, but we venture capitalists are making decisions based on the fact that this company has got $1 million of early revenue. But none of that might get renewed, or that might never convert from a pilot to a large scale implementation. And how should we think about it? So I think at the end of the day, if you're not solving really difficult problem, especially in the B2B space, right? I think it's going to be tough for these companies to sustain. They may see some early success, right? And so moats are built by. There are very few product modes anymore, right? Especially if it's a software-only product, right? Because as James was mentioning, a couple of engineers out of school can vibe code something over the weekend and start getting some early traction. So the modes are really around distribution, or if there is some deep sort of intellectual property, perhaps through some vertical SaaS, or some very strong domain understanding. Or perhaps we look a lot, at least, if there is a phygital element to it, right? So an IoT play combined with, with a cloud-based or an AI-based solution, maybe some AI on the edge. We have also looked at spaces that are regulated. So one nice thing about regulated spaces like financial services or healthcare is that very tough to get into, but if you get in there, then you can be successful because you have a fairly serious moat over there, right? So I think the distribution moat is probably the product moat. If it's software only, is probably the weakest. Distribution moats are probably something that can be sustained for a while. But really, the other thing that will help companies is just continuously innovating and running really faster than everybody else. That is going to be critical as well, right? So I think I just saw something pop up saying Sequoia did a seed and a Series A of $48 million in a startup, right? So we're seeing some crazy numbers out here.
Yeah,
I'm a little concerned that there might be a little bit of the prior sort of Web3 type of a mindset where just a lot of capital is going to chase this blindly, but we are seeing some real revenue happening. So this is where the greed and the fear sort of has to balance itself out for us as investors. But I think if companies have some serious moats around product, around distribution, or through regulatory cover, I think they will do very well.
What a great conversation about moats. And we need to think about those from lots of angles. The distribution one's good, obviously good insights around product, but speed to market, the way how quick we move matters. Sarah, let me ask you this. As entrepreneurs are considering an investment from an organization like yours, or perhaps an M&A, what insights would you give to entrepreneurs as you think about those two elements, the timing of an M&A versus investment?
So I think it just depends. I think one of the benefits or one of the considerations is around, talked earlier about we're looking for founders who are trying to solve transformative problems. And so often, depending where they are in their cycle, that an investment gives them more runway to solve that great big problem. If they're too early and they pursue the M&A pathway, it can sometimes limit pursuing that. It limits the amount of time that they end up pursuing the bigger challenge, the bigger pathway, and so have seen that many times. But some founders, and that's something we're always probing, is is it something that they want to, is it more a product? Is it more a service that they're just wanting to create and wrap and move on to the next one? Or is it that they really want to build something that's more massive and scalable? And if it is, it makes more sense from an investment perspective, where others an M&A will make more sense. Obviously, when they get further along in the journey, an M&A can make more sense, and that could be just where the founder is in their cycle as well. Yeah.
Sure.
Exactly.
Hey, good thoughts there. And we're kind of coming to the end of our segment. So be thinking about any final suggestions or comments that you think this group ought to hear from you. But James, for you, any thoughts about this investment versus M&A, and what role does your firm play in the exit process?
Sure. Glad to talk about. I think investments, it doesn't matter whether it's investments or M&A. I think the goal is to grow the company or to create some sort of a liquidity event. So if you're to do investments, I would assume it's sort of more like you're getting capitals, you're doing more of your organic growth. Perhaps you will use that money to do a little bit some merger acquisition. So the key thing is really to identify your company's functional fit or your product fit with your target or with the money of what you want to do with it. And personally, I believe the best return for M&A is probably under in circumstance that you already have a product and you do see product market fit, but you do need to get that distribution out as quickly as possible. I think without distribution, you're not going to grow the company.
Okay.
If you can identify a couple distribution channels at a good value, I think for your product or technology, I think that would be a good M&A target. As far as we love to make introductions to people, to the companies within our network. We always love to do an investment deal or M&A deal. We've done that before in the past. Usually we do a much smaller scale. And like Rob, you're very successful. Usually we do companies around $10 to $20 million. That's our sweet spot. Typically they're private companies. But I really think that's the way to go. You can't just grow by yourself in your basement. You really to build up your team either through investment in talents or M&A with other companies' talents. I think if you are growing your company, you certainly should look at this two paths to move forward.
Yeah, great thought there. If a company needs distribution and build a stronger moat, M&A could be the right scenario for them to have a growth partner with a balance sheet and a strong go-to-market capability. That's good insight there. Hey, so Sarah, any final thoughts here for the group? Things that are on your mind that we didn't cover that you think they ought to be aware of?
I think just making sure there's no part of the journey that should be done in isolation. It should always be making sure that working with others, making sure that you're working with partners or you have people around you that are testing, pushing back on your thinking. And then I would say, again, whether it's from an investment perspective, that you're keeping in mind that it really is a relationship. And, we were talking about mission-driven investments. That's a relationship. It's not a transaction. And so oftentimes you'll see founders that fundraising is a tough slug. And so when they get that term sheet, they're just happy to get that term sheet. But that can be, it's a long relationship. And so you want to make sure that the fit is there, that there's alignment. So being very thoughtful and making sure that that you've got the right person on the other side of the table, and that they're the right person for you or the right organization for you. So that is absolutely fundamental, and testing that at the outset.
Sarah, great insights, and we're so thankful you joined today. Just great feedback for this group. Let's go to you, James, for some final comments, and then Sanjay, if you'll take us home with the final comments here.
Yeah, I think running a company is not easy. Certainly, it could be rewarding, not just on monetary reason, but also for your own personal growth. I think everyone here can attest to that. I wish you the best of luck. And if there's opportunity, you should definitely reach out to Corum. There's always the opportunity out there that you haven't explored.
Thank you, James. Good insights. And then Sanjay, wrap us up, please.
So I'm going to share 3 of my favorite quotes in relationship to entrepreneurship. The first is, nothing is as good as it appears. Nothing is as bad as it appears. So I'm sure founders wake up with, some terrible news in the morning, and hopefully that I always am looking forward to bad news in the morning, because it says that the rest of the day is going to be better. When I get good news in the morning, I'm a little nervous about what else is going to show up during the day. The second thing is, good companies never die of starvation, but they can often die of indigestion. So, if you're building a good company, there will always be capital available for you. It may not be at the best of terms, but good companies rarely will die die from lack of access to capital. But the converse is often true, where companies raise a lot of capital and then try to solve too many problems and run into an indigestion problem. And then the third one is, good companies are bought; they're not sold. People will find you. And as an example, we had a company in our portfolio that built a reconciliation software product. Patrick Collision directly sent an email to the founder, and the company had no clue that they were even under the radar or visible to a company like Stripe. And it ended up being like close to $150 million acquisition for a company that was 3 years old out of India, right? So while of course, it's very important to partner to be visible in the right circles and at the right time, if you do want to sell the company, get a partner. And of course, we have a great relationship with you guys at Corum as well. I think if you focus on doing the right things and doing them right, and heads down, just focus on building your business, the world does notice, right? And good things can happen. So I always tell founders, to have a good outcome, just build a great company, right? And good things will happen.
What great insights from all of you. Look, wealth of experience. You're doing it every day. To take time to share this with this audience, we're deeply grateful, and some great nuggets have coming out of this. So, hey, thanks everyone for joining us today. I'm going to turn it back to Mr. Rob Griggs to carry us forward.